Welcome, everybody. Thank you for joining. Let this attendees list build up a little bit, and then we'll jump into this deck for you all. In terms of kind of how we're going to structure this, we'll walk through the deck. If you have questions, please drop them into the Q&A section at the bottom of the Zoom. We'll leave time at the end, about 15-20 minutes, to answer these questions. We want to answer them live as well, because if you have the question, chances are someone else who is in this meeting will also have the same question, so we'll be able to answer for everybody. So on that note, we'll also include our emails. We'll drop them in the chat so you can all email us as well. Feel free to reach out with any questions that you do have. If you want to set some more time up to speak, please let us know. On this panel right now, we have John Bullitt, me, myself. I am an account executive here at StartEngine. I'll let Katie introduce herself as well.
Well, welcome again, everyone, and thank you so much for joining us today. I'm looking forward to speaking with you about crowdfunding, really kind of the new age and alternative for raising capital. So just a quick disclaimer, we will go through some kind of traits of the crowdfunding industry, as well as some specific examples. So please know this is all for educational purposes, not necessarily investment advice. Now, what is crowdfunding? It really is allowing everyday investors an opportunity to invest in a business or a product. There's a few different types of crowdfunding. The first one is going to be rewards-based. And some of you might be familiar with pages like Indiegogo and Kickstarter, and those are great examples of rewards-based crowdfunding platforms. And they're typically there to help businesses raise money for a specific product, consumer goods typically, and really help them raise money to get them into the manufacturing phase. There's another form of crowdfunding, and that's equity-based, which is what we do here at StartEngine. So typically companies that are at a little bit of a later stage, and they're looking to raise money from the crowd in return for equity. And what I mean by the crowd is typically, a large group of people with smaller investment amounts. We'll get into that a little bit later on in much greater detail. The last kind of type of crowdfunding is debt-based crowdfunding. You might be familiar with the Lending Club. What that does is it raises debt financing, and the lender is then compensated back with interest in return. So taking a closer look at equity crowdfunding, that's really what StartEngine's niche is here you can raise up to $75 million from a large group of investors, the general public. And really they can be accredited, but also non-accredited. And this gives the non-accredited investor that opportunity to invest in a company that they might not have always had the chance to. Now there's two key types of crowdfunding. One is called Reg CF, and the other one is called Reg A. The big differences between those is how much you're allowed to legally raise up to in a 1-year period. For Reg CF, it's a $5 million maximum. For Reg A, it's a $75 million maximum. John, a little bit later, will go into kind of the key process, but mostly companies start with a Reg CF. And once they've found a really good kind of market fit in the crowdfunding space, might consider going into a Reg A plus later in the future. Now, please note, anyone can invest in these offerings. Like I said, both accredited and non-accredited, as long as they are over the age of 18. And they do this through the use of an equity portal, which is what StartEngine is as a registered broker-dealer. Now, why raise from crowdfunding? There are tons of opportunities to raise money, whether it be VCs or private equity, but what really sets this apart, one of the things that really stands out to me is you get to set all of your own terms for the raise. And that includes company valuation. We want to make sure that as a founder, you're maintaining control of your business and raising capital on the terms that you want and that you're comfortable with. We can, of course, be as hands-on in that process with you in terms of, helping you find the proper revenue multiple and giving feedback as to, okay, would our, investor network be receptive to this? But at the end of the day, setting the terms for the raise, valuation, price per share, type of share is all up to you. In addition, not only are you raising money through this process, you're growing this incredible community of brand ambassadors who could very well so be your next potential customer. Think about it. I mean, if you're launching this campaign and someone is inclined enough to invest $2,000 in it, I mean, I'm pretty darn sure that the next time they're walking down the aisle at a liquor store and maybe they see that bottle of tequila that they invested in, that they're going to buy it, try it, tell their friend about it, gift it, whatever it may be. So building this incredible community is something that I feel is huge value. And then, of course, you can constantly be doing a crowdfunding process. So a lot of companies, like I said, start with that Reg CF and will potentially move into a Reg A in the future. Now, with all of these incredible pros, there are, of course, some things to consider. One of them is that for this to be legal, essentially, you have to be giving the investors all information that they would need to make a reasonable investment decision. And one of that components is going to be sharing your financials with these investors, essentially making them public. So do keep in mind that any information you might find on a balance sheet or a profit and loss statement would be available to the general public on the campaign page. In addition, these campaigns definitely do take time, energy, and focus. Unfortunately, it's not as easy as sitting back and watching the money roll in. Some companies have been lucky with that strategy, but typically there's a lot of efforts in regards to marketing and communication with my team to make sure that we're having the most optimal strategy. Now, the last one, this one's pretty standard for any form of raising capital when it comes to reporting obligations, but just something to note, it is yearly for Reg CF, so that's the $5 million maximum, and semi-annually for the Reg A, the $75 million maximum. Now, a lot of people do kind of weigh the options of venture capital and equity crowdfunding. And one of the things that makes me most proud to be working in the equity crowdfunding space is that we are democratizing capital, really giving, yes, these investors great investment opportunities, but also allowing entrepreneurs in all walks of life an opportunity to raise money for their business. And something I'm really proud of is, in terms of gender diversity, is something that we definitely strive for and have huge initiatives. For example, in 2017, roughly around 27 or close to 28% here of Reg CF funding went to a team with a female founder. Compared to the VC world, that's around 11%. And 42% of Reg CF funding went to the top 5 metros, whereas that's 80% in VC. So as you can see, we're really trying to be inclusive of founders of all different walks of life here. Now, VC, you might be kind of familiarized with kind of their standard pre-seed rounds, seed rounds, or Series A. In terms of our kind of strategy here, typically companies start with that Reg CF, as I discussed, raising up to $5 million in a given year. They potentially would go into a Reg A, which would be similar to a seed round in the VC world, and then go on to do, wonderful things afterwards. We've had some companies go on to raise much more money from institutional rounds. Maybe they've gone on to IPO or potentially be acquired. And there are some examples there of companies that have gone on to do that. We are certainly not the only company in this space. There are, a lot of other great companies here, but some of the things that really kind of set StartEngine apart from some of our competitors, such as a Republic or a WeFunder, is that we really do offer what I like to call the white glove service in the industry. When it comes to building out your campaign page, we have a full-time team of creative designers who are there to collect all of your digital assets and put them into a wonderful template for you and really kind of share the story of your business and why it's a good investment opportunity. In addition, and I'm sure John will go into this a little bit later, but we do have a few new kind of initiatives and some things which we're doing to position us compared to our competitors, one of them being our secondary trading platform. We really see ourselves as a double-sided platform, right? We have these founders and businesses that are looking to raise, but we also have these wonderful investors. And we want to make sure that we are giving them equal opportunities for liquidity and a potential return on their investment in the future. So a lot of new initiatives like that, which are really separating StartEngine amongst our competitors. And I will pass things over to John, who's going to go into a little bit more detail about the fundraising process and what it looks like to raise on StartEngine.
Absolutely. So, this is kind of how we see this fundraising process for equity crowdfunding, specifically on StartEngine. First step, which is what we're doing right now, is really learning about equity crowdfunding and about StartEngine. It's very important for all you entrepreneurs to be able to make your decision based on all facts that you have available. The more that you can understand about equity crowdfunding, the better. Obviously, raising funds is a big decision, and how you go about that is a big decision. So this is really where we're at right now, that first step of learning. The second step would be for signing. So after a few calls with the StartEngine team, we'll work on bringing it to our team, our internal team, about reviewing these companies. We get approval, we sign these companies and launch a Reg CF. So the timing, I'll break this down a little bit more. It's about 5 weeks to get a Reg CF going. You raise these campaigns, it takes about 6 months. You keep doing these Reg CFs until you get to a point where you're in a position to raise more than the $5 million cap. At that point, we start working on a Reg A. Reg A is obviously up to 75 million, so you can raise a substantial amount more than a Reg CF. And then at the end of the day, you can list your shares on our new secondary platform. So offering liquidity back into these private markets is something that doesn't really exist outside of the StartEngine ecosystem. So we have a platform that's an ATS. Everything's a peer-to-peer market. Everything's done on limit orders, no derivatives. That's going to cause a lot of downward pressure. Options that's going to cause a lot of price volatility. So it's just a way for you to add liquidity back into your investors, which obviously kind of helps you raise more money overall on the platform. So this is kind of the timeline that we do see in terms of raising money on StartEngine. So just breaking down the two main differences between the Reg CF and the Reg A, the two regulations. On the Reg CF side of things, you're able to raise up to $5 million in a 12-month period. So you can do that through 2 raises, you can do that through 3 raises. As long as you're not raising more than $5 million in a 12-month period, you are okay. Like Katie mentioned, these are open to the general public. So you are getting these accredited and non-accredited investors. There are limits in terms of how much a non-accredited investor is able to commit to these campaigns. We do want to make sure they are not investing beyond their means. So their dollar investment amount is a little bit lower than the accredited side of things. Next up, the entrepreneurs stay in control and you set your own terms. So these kind of go together, I'd say. Really being able to set your own terms is a huge draw for entrepreneurs to raise their own capital. And they're doing it by staying in control. So about 90 to 95% of companies on StartEngine right now are raising via common non-voting shares. They're not giving up any board seats. They're not giving up preferred shares or anything like that. The business is still in the entrepreneur's hands to really decide kind of how to proceed. You're not being pushed to get returns for a professional investor within 3 years. You have that control. You have those voting rights to really grow at your own speed. That makes you comfortable. Obviously, there's so many kind of horror stories of VCs really pushing startups to get their returns faster. That ends up being horrible for the business. You won't get anything like that from the equity crowdfunding side. And finally, can launch within days. I'd say this is more like weeks. It does take a lot of preparations from both the company side and the StartEngine side to get this going. Our timeline for onboarding is about 4 to 5 weeks to get a campaign launched from signing to actual launch. In terms of costs and fees that are associated with these raises, all StartEngine fees are taken on the back end. So in terms of upfront cost, you're looking at a legal and financial review. So in order to raise up to $1.07 million, you need a 2-year CPA review. That's generally costs about $3,000 to $5,000. And then if the legal side of things, we don't require that you use an attorney through the onboarding process unless you are an LLC. So a lot of LLCs do end up converting. It's worth talking to a tax advisor to kind of really understand the tax implications of converting from an LLC to a C Corp. But you also avoid having to send out K1s to all your investors on an annual basis. So in terms of the StartEngine fees that are taken on the back end, we take 7% of the cash that's raised. So basically you raise $1 million, it's $70,000. There's also a credit and debit card fee. We can kind of break that down if you want to speak a little bit more about that on a call. And then finally, we take 2% of the raise paid in equity. So this is 2% of the raise, regardless of the valuation. So if you raise $1 million, it's just $20,000 worth of whatever security that you're selling on the platform, regardless of if the round is at $10 million or $50 million. It's just $20,000 worth of that equity. And then finally, we have a $10,000 premium service fee. So I've seen some questions in the chat about how much that white glove service cost. That's $10,000 taken from the first disbursement of funds. And I'll kind of break down a little bit more about what you're getting out of that later on. So on the Reg A side of things, this is the larger raise. I won't spend too much time on this just because we want to kind of gear companies towards the Reg CF side of things. But the main differences that you should note between a Reg CF and a Reg A are mainly the timeline and the cost. So the timeline of launching a Reg A is about 3 to 5 months, just because there's more kind of scrutiny from the SEC on these deals. So there's a lot more back and forth in terms of being qualified with the SEC to launch a Reg A. So what most companies do is that they start these preparations for a Reg A while they have a Reg CF live. That way they're still raising money, they're still raising on their own terms, and we're preparing the larger raise so that when they do max out or when they do get qualified with the SEC, we can just launch the Reg A side of things. Finally, the timeline, the cost, So the cost of launching a Reg A is also about $100,000 up front, as opposed to that just $10,000 for the Reg CF. So you need to have a lot of capital kind of there ready to deploy for the audit, for more of a legal review, more due diligence on these Reg A side of things. And then finally, the fees, pretty similar to the Reg CF side of things, the 7% of the cash and the 2% of the equity. You'll notice here there's no premium service fee. We've knocked that $10,000 off for those Reg As. So in terms of making your decision on if equity crowdfunding is right for you, there are some things to consider. And Katie touched on these a little bit earlier, but the first one is the transparency aspect of this. So your financials will be filed with the SEC. Anyone can go to the SEC's EDGAR website, search for your company, and pull those financials in your Form C. I always like talking right now about, the balance between control and transparency. If you really do want to retain that privacy of your financials of your company, to be honest, this might not be the best path for you. But at the same time, if you are looking to retain more of that control by selling these common non-voting shares and not giving up any board seats, and you're willing to give up that transparency, this is definitely right for you, because it's that balance that really matters. And it's not right for everybody, but it is right for a lot of companies right now for that control aspect. In terms of the ongoing reporting, you do have one annual report for the Reg CF. You need to file a Form CAR within 120 days of your fiscal year end. StartEngine provides support on that, where we give you a template. You fill that out, you give it back to us, and we file that with the SEC. So in terms of getting those financials prepared, that's normally about $3 to $5K as well. On the Reg A side of things, there is an annual and semi-annual report. So there's two different reports, generally costing about 15 to 20K per. So as you can see, the Reg A side is for these bigger companies, just the higher ongoing costs, higher upfront costs, and everything like that. Finally, there's no guarantee for success on these raises. We really do as much as we can to help these companies raise as much as possible through StartEngine, but sometimes it just doesn't work out. What I can tell you, across all our campaigns, considering that we raise for companies at all stages of development in all different types of industry, the most important factor of success across these campaigns is really the company's buy-in into equity crowdfunding. So the more bought in you are to StartEngine, to our process, the more time and resources you're willing to give StartEngine in the campaign, the better it's going to go. You're not going to put this up and raise $1 million overnight, but if you're willing to kind of put the work in to raise $1 million, we will do everything we can to get you there. And then finally, the passive investors versus the more strategic investors. So this is what I was talking about earlier, in the sense that you're not being pushed to get a strategic investor their returns. It is a little bit different as well, where instead of having one strategic investor with a lot of connections in your industry, you are getting these passive investors who maybe they do have connections to their industry, they're just not necessarily as strong. Like Katie said, you're bringing on these investors as brand ambassadors. These are your best customers. They literally have skin in the game to see you be successful. So they will do everything that they can to make these connections for you, to drive that business forward, to increase the revenue for your business. In terms of the way these raises really go, there's kind of three areas where these funds come from. The first one being from the company side of things. So that means email lists, that means customers, that means partners, that means, any previous investors that you think would want to go in. If you haven't tapped into your friends and family network, or if you have already, but you still think that they would be willing to contribute more, having them come into the raise early on in the campaign really helps the success overall for these raises. Because basically you'll see here, the StartEngine platform does contribute about 50 to 65% of the raise. We have over 500,000 investors in the platform now. We just crossed that mark, I think last week actually. So really, there's two ways that we tap into the StartEngine community. First one being kind of through milestone marketing. So this is free for all companies. Essentially, as your campaign grows larger, we're able to send more and more emails out to our network, really highlighting the traction that you have, which really gets our investor network excited. We are regulated very closely by the SEC to market all companies equally, and that milestone marketing essentially helps us overcome that while still getting the word out for your raise. And then the second way that we do tap into our investor network is through ad buying. So StartEngine is a full service agency. About 75% of companies on the platform use us as the agency for their raises. And when companies use us, we're able to target existing StartEngine investors. We know that they have an interest in equity crowdfunding, so you see pretty good returns on those ad buying. And so those are basically the two ways that we tap into them. The last part, as I just alluded to, is really from new audiences. So investors from outside of your community and outside of the StartEngine community. And the way we do that is through ad buying. So social, digital media, Facebook, Google, LinkedIn, things like that, to really spread the word as much as possible and get as many people incorporated to the raise as possible. So you'll see here, I mentioned earlier that 90 to 95% of companies on StartEngine sell common non-voting shares. This might be a little dated, but one thing to note that I do want to point out on this slide is that you won't see any safe notes in here. StartEngine made the decision to not allow safe notes on the platform because the SEC essentially said that they don't believe that a safe note is safe for the general public to use as investing, which is hugely ironic, but it was obviously made for more of the accelerator side of things. So, we've really seen that the benefits of kind of doing the common stock really outweigh anything else. We have some convertible notes on here. We have seen a little bit of a draw on these raises just because, investors don't fully understand what they are receiving with convertible notes. So in terms of the way this process goes, and Katie alluded to this earlier with the white glove service, we really lend an active hand in these raises. We really want to make sure that our companies don't feel like they're just using StartEngine as a website and then figuring equity crowdfunding out on their own. This is really both of us working together to raise as much as you can through the platform. So the way we do that is through a dedicated account manager, also known as an onboarding manager or onboarding counsel. They'll be the ones to really work with you to get you launched on the platform as fast as possible. So they'll be leading you through the compliance and regulatory aspects of these raises, helping you prepare the Form C and eventually filing that with the SEC. We give you a creative lead as well to build your campaign page out. We've built over 400 of these pages. We've raised over $400 million. We know the template that works for equity crowdfunding, but it's just a matter of working with you during onboarding to make sure that your brand and your voice is really shining through on that page, because we want it to be the messaging that you want to send to investors. So you work very closely with a creative lead to nail down that messaging. Finally, you have a funding strategist that you'll work with. They're really running point on kind of the marketing strategy for your campaign. That includes, coming up with creative perks that's going to drive investor interest. That includes, coming up with strategies to tap into your community and coming up with strategies to tap into the broader public. So finally, we have the compliance team. Like Katie said, we have 8 in-house lawyers. They're awesome. They review everything. We are a compliance first company. We want to make sure that you are covered up, that we are covered up. So we're able to kind of, rely on them to make sure that we are in all compliance and regulatory all checked out there. So in terms of kind of, preparing for one of these, and this goes back to that, timeline in the sense that right now we're learning. So in terms of being ready for an equity crowdfunding raise, there are some things that you should be asking yourself. Who is your audience? Who is going to be the people that invest on day one? Who are your best customers? Who, your friends and family will be willing to contribute capital to really help kick the campaign off? You also want to kind of identify what's your main differentiation aspect. What's really making your company stand out from the other startups in the same field? What are you doing differently that we can showcase to investors to drive that investor interest? Because that's really why the public is going to care. What are you doing that's really kind of helping the world out or helping this industry out? What are you doing differently? Finally, you want to kind of identify the marketing channels. Like I spoke about, being able to tap into the broader public and your community. What's your engagement rate like? How can you kind of improve your engagement rate, keep your best customers kind of more involved in the company so that when you do launch a campaign, they're excited to be able to invest, and really kind of working on the ads, identifying who are your customers for those ads, where you're getting the best returns. And finally, I think we're all kind of prepared for this one, but being willing to adapt. With COVID over the last year and a half, keeping your knees bent, being prepared to kind of change strategies, being prepared to kind of revisit what you're doing in terms of the business, in terms of the raise, and be willing to kind of change things around to really make this be successful. There's not one right way to be successful in these campaigns. There's a lot of different ways to do it, and being able and being willing to explore all those ways goes a long way. So I'll walk through 2 examples right now of companies that have raised on StartEngine through a couple of different rounds. So Xcraft, they did 2 Reg CFs into a Reg A. On their first Reg CF, they had a pre-money valuation of $6 million. They were more of a consumer drone, and they were able to raise $1.07 million, the limit at the time, in 60 days. So they were really able to kind of generate a lot of buzz around the company. When they were working on their second Reg CF, they pivoted a little bit to basically want to build out more of a commercial drone at that point. So they used the second Reg CF, highlighting the commercial drone aspect of that with a pre-money valuation of $18.2 million. And they oversubscribed that cap of 1.07 million and rolled that over into a Reg A. So they were really pushing these ads very hard. They had a great campaign. They had a great strategy for that, and were able to raise successfully through 3 different rounds. Next up, we have Hilete. So this one was a little different in the sense that their strategy compared to Xcraft was a little bit different. Hiley was very successful in terms of being able to mobilize their community, their customers and things like that, to get them to invest. So they did 2 Reg CFs into a Reg A. They maxed out both of their Reg CFs before starting the Reg A. And they were really great in terms of emailing their customers and really getting the word out to their customers about their raise. So they had about 150K on their email list coming into these raises. And they were really able to tap into those groups by offering perks, right? Every investor gets 50% off purchases from the online store. People want that. If you're buying these highly closed, this is something that you want. If you love them, if you're getting 50% off and you're getting shares in the company, that's kind of a win-win all around. So they were different in the sense that they tapped into their community a lot more rather than Xcraft, who was able to kind of tap into the broader general public. With that, Katie and Inyaki's emails are all listed right here, so feel free to email us. I believe Inyaki will be sending out this deck for everybody to be able to look through and the presentation as well. If you have any follow-up questions, please email Katie or I or Inyaki. We're happy to set some time up to speak with you more. The team is really looking forward to hearing from all of you. Thank you all for your time, and appreciate kind of all the kind words in the chat right now. So please let us know how we can help, and looking forward to working with you all.
Thank you, everyone.